afternoon, everyone, and welcome to the market close report for Wednesday, the 18th of February. Well, the Aussie market's winning streak remains alive. We've actually got the ASX 200 lifting for a third straight day now, up around 48 points, 0.5% for the ASX 200 to 9,007. And that means we're inching closer to a record high, which we haven't enjoyed since October last year. And we actually got to within around a whisker away of hitting just a week ago. We just didn't have quite enough enthusiasm about to get us there. It also meant that the ASX 200 did close above 9,000 points, which is an encouraging sign. And also we finished near the best levels of the day as well. So we'll see if we can maintain the momentum, because recently, each time that we've cracked 9,000, the market kind of got cold feet and went backwards. Now, the US market was back online after a long weekend. Didn't really give us much in the way of a catalyst last night either. Yes, all three major indices rose, the Dow, the S&P 500 and the Nasdaq, but only by roughly 0.1%. Now, as far as sectors go, locally today, it was actually just the materials that went backwards, but only by 0.1%. And that really came down to two things. One is that the largest stock in the sector, BHP, went backwards after a very big lift yesterday. And secondly, gold miners, just as a group, did quite poorly because of a near 3% fall in the gold price. Now, outside of that, we had gains everywhere across the market. The standouts, certainly tech, which were up around 2.3%. But we've got to remember here that last Thursday and Friday, it actually tumbled by 11% over those 2 days. And it still is in its 7th straight month of decline. So this is a sector that in the past was a bit of a darling in markets, but in recent times has come under a lot of pressure, partly due to valuations, which were starting to get a little stretched for some stocks there, but also concerns around AI disruption, which hasn't been helpful. But again, outside of the materials today, there were gains in all other sectors. So let's take a look at some of the winners on the market. Many of these were actually companies that released their results. In fact, the three best performers on the market today were companies that handed down their earnings. So Superloop was top of the list. The telco up around 18% today, handed down a lift in half-year profits, which seemed to beat the market's expectations, but also announced a $165 million purchase of Lightning Broadband. We also had Netwealth and Magellan, two others with their earnings out, and they both rose around that 12 to 13% mark. Now, the Lottery Corp deserves a mention. It was up 7% today. Now, results were mixed. Revenues edged higher by just a couple of percent. Profits actually went backwards, but the market seemed to be encouraged by the fact that it maintained its dividend. Now, this is a company that very much benefits from those massive jackpots for its main games, which are Powerball and also Oz Lotto. And one of the negatives for the Lottery Corp is that there are actually some very much unfavourable jackpot numbers coming through. In fact, it was the least favourable half for jackpots since the demerger from Tabcorp back in 2022. So they love those big jackpots, $30 million and above, because they get more eyeballs, but also make more ticket sales off the back of that. So the value of Powerball and Oz Lotto jackpots over the half was $873 million. Sounds like a lot of money, but that was 14% lower than just a year earlier. So it raked in about $400 million less in ticket sales over the half. Now, National Bank was up around 4% today, hitting a record high, so having a very strong performance. Now, it released its quarterly numbers, but who said that quarterly numbers can't impact your share price, because it is up today quite strongly. First quarter cash profit up 16% to about $2 billion, and it continues this trend we've had over the past week or so, where strong earnings are being rewarded. Medibank up around 6% as well. It's been a pretty busy couple of days for the insurers. This, of course, a day after the federal government approved those increases of about 5% to health insurance premiums, and that's above inflation, but also the biggest annual rise in what the government has given the go-ahead to health insurers to pass on to customers, the biggest annual rise since 2017. So stocks like Medibank today lifting premiums by about 5%. It rose strongly, and also NIB in a similar boat as well. Now, there were plenty of losers on the market today. One of the worst was Capstone Copper, which fell by about 14% today. It updated the market with its production goals for the year. It reckons it's going to dig up a similar amount than it did a year earlier, and also reckons that costs are probably going to lift. Now, having said this, copper prices have been around record highs, so copper miners in general have been quite well supported, and Capstone included there. Suncorp heading down by about 4.4% today, delivered a big fall in profits for the 6 months to December 31. Pretty bad weather has been a weight. Now, resulted in a spike in costs, particularly in October and November last year. Now, CBA down about 0.7% today, but there is a good reason for that. It's trading ex-dividend, $2.35 per share div, which it's going to pay out to investors at the end of March. Keep in mind as well that since handing its earnings down just last Wednesday, its share price has jumped around 11%, and that's been followed by well-received quarterly numbers from the other banks and gains there as well. And BHP Group, yes, it's down almost 0.9% today, but it had its best day in 7 months yesterday when it did better than expected with revenues, profits, and also its dividend. It was actually the first time since I remember that the copper business actually became its biggest earner, just overtaking iron ore, only just, but it now accounts for about 51% of profit. So let's look forward from here. There'll be a few bits and pieces out of the United States this evening on the economic front, including some figures on durable goods orders, some figures on housing starts, the minutes from the latest Fed meeting as well. Tomorrow at 11:30 a.m. Sydney time, we're going to have those job numbers out for January. Always an important piece of the puzzle for the conversation around what might happen next for interest rates, and a huge day for profit results tomorrow as well. One of the biggest of the entire year for half-year numbers here in Australia. So stocks like Rio, Telstra, Transurban, APA Group, Goodman, PLS, Zip, and too many others to mention will be out with their results. So that could very well be a driving force of markets tomorrow, as really they have been in the last couple of weeks as well. Let's look at currencies quickly. The Aussie dollar is weaker against most, sitting at about 70.6 US cents. It also softened against the euro and the Japanese yen. Have a great evening, everyone, and we'll catch you tomorrow.